All right, good morning. It is 10 UTC on the dot. Going through everything from yesterday. Incredibly strong rejection we saw at the high levels once we started tapping close to 70K or just at it. The really nasty one was actually the closes that we started getting it, right as the US markets were opening up, breaking that upside structure and then forcing us to go into that liquidity to the downside. So we have broken that local upside structure, but there's some local priority down. However, there are some levels that are interesting as a potential regain, as people look like they're stepping into short this quite heavily as well. So, with that being said, the big stuff here is we are very close to local liquidity that could easily take us down to like 64K, 64.5. Any local failures would likely push that to the downside. And we'll go through the failure here and then the levels to regain for potential continuation. Also, just kind of looking at the funding rate heat map, this is just kind of a 6-month outlook of, when funding rates get so positive, basically incentivizing downside moves, and when they're very negative. So when you see these massive, like, positive funding rates, usually when they start wiping, these are actually like the high points. These are when they get very, very overbought, funding rates get very positive. And you can look at the time frames of the dates of this, and you can see very clearly that the market tends to reverse down when they're incredibly overbought. Conversely, whenever you get into periods with quite oversold areas, there's likely market continuation. So generally speaking, right now, we do have quite a bit of, I would say, negative funding rates across the board, especially on some altcoins like TIA and AVAX and the rest. So it's always interesting to see when they get turning very, very blue, especially after they've had, the major flushes out. Like even if I color it down a little bit, to make it a bit more apparent, June 6th, we're talking about like the high structure when stuff was really incentivized to go down. So the fact that we're not seeing that yet is good, in my opinion. We're not seeing very, very overbought, very, very positive funding rates, just effectively a localized failure that has broken some local structure. Looking over at Trading Light, just in the local area, first off, we'll look at the heat map as far as resting orders. Not a whole lot. There was quite a bit of fills going on, and these actually look like they got filled around 66K. This is good and bad. Basically, it means that if we do start failing these lows, the likelihood is that we have another push back down towards 65K and then eventually 64.5, 64. So into this area is where I'd expect us the moment we start breaking down and creating those new lows, as we do have priority down. Now, the failure that you want to see came in at, what was that, 13 UTC on that close of candle. That hourly close broke that upside structure. And then you saw a very, very weak little retest on the next candle before a full send to the downside. Things were filled, not able to hold it. And then they had a continuation, basically flush out of all of that local long liquidity. Looking over at the footprint and why it starts getting pretty interesting at a certain level, or at some certain levels, you see that there's a very, very big amount of shorts starting to stack in the same place. So from hour to hour, they're all in one place. 2K more short delta on the other candle, 6.2, and they're all starting to get localized around, look at that, 67K. 1.9K. What do we have there? 67K. So with that, right, there's still definitely enough liquidity if we're going to get some type of bounce on shorts. Conversely, on the long side, there's not a whole lot here locally that's really holding price up. So the argument is, as long as we're holding the lows here, any gains that start getting us above 67K start to put these guys underwater. So all these big, massive short order blocks at 67K are likely, if there's a regain, that'll take us back to the upside. So keep an eye on that. It's definitely an important level that we want to see some type of flip on. But again, the big thing here is you have broken that upside priority. You've created lower highs and lower lows. So you are trending to the downside on lower time frames. Looking over at Trading View. Boom, there we go. So the move down, we talked about the failure at 69.2. We got it a little bit janky, but it did close below structure and break stuff. So that is done. We had the continuation failure underneath the weekly open. Close below, bearishly retest for continuation down. So that is done. Locally, yes, you're still in a priority down. However, there is definitely the potential regain. That local flip of level, 67K, call it, that's the flip that starts to potentially take you back up to retest structure. Now, we have already retested some of the things locally. We haven't retested things like 67.8, 68K, 68.2. We've only bearishly retested them on the way down. So the likelihood is, if we do have some type of regain of level, there is that potential for continuation. But again, because we broke this, we broke the upside structure, the new low that we created here moved effectively all of the lows that the higher lows we were making from the weekend. It kind of broke that trend. So we are trending down on the lower time frames. The higher time frame is still up. The big things you want to hold now, no matter what happens, is around 64K. These lows, 63.7, 63.8, they must hold. The moment we create any new lows from this structure, no matter what happens after that, you're looking for higher time frame failures. Technically, here you're still looking for regains on the higher time frames. So I'd say the game plan for today is very simple. We are seeing quite a bit of, after that major shakeout, lots and lots of liquidations. You want to see some localized gains. What we're seeing now is not really conducive for, easy to trade price action. That's the local flip that you want to see a gain. We're currently bearish or retesting the daily open, and there's some stuff below us that we want to see potentially retested all the way down to 66K. Now, with that being said, are we still looking for that failure if we close down, kind of bearish retest continue? Yes, that's still the local play. The higher time frame play is gain that, and now all of a sudden we're looking at to punish these late shorts, all of them that came in at 67K. That could give us a push back up to retest structure above. So to get really bullish here, to get back into the game, so to speak, to call this a deviation, I would want to see a regain pretty strongly of 68.2K. However, with that big breakdown, the fact that we barely retested a lot of these levels really nicely, the nasty 1 hour break that broke the upside structure for basically a Bart Simpson straight down. That's really it. You've got local priority down. Higher time frame is technically still up until we start closing under 64K. Just keep an eye on that, as there is downside priority, and that's still the direction of travel until we start seeing a regain of level, which should be seen around 67K if there's going to be any type of continuation upside. On the higher time frame as well, it looks rough. Bears are retesting right now. The current 4 hours just absolutely nuking off a cliff still for that continuation. I would be much happier for that local gain of level, reestablishing some support where we're effectively just bearish retesting to go lower. So for me, downside priority definitely started changing the moment we closed 4 hours underneath this at 68.2, breaking not just the high structure at 69.2, but the local stuff at 68.2. That's just looking for continuation down. With the lows, if we have that full move back down, any new lows, like let's say we just leg down right now, I'm expecting some type of bounce on the next play, potentially all the way back down to 64K. But that's that. Take it easy, and I'll catch you guys tomorrow. Peace.